In a surprising move, two US lawmakers have introduced a bill aimed at clarifying the taxation of cryptocurrency staking rewards. The Providing Tax Clarity for Digital Assets Act proposes a single taxation approach, preventing double taxation and fostering innovation in the US crypto industry. Stay tuned as we dive deeper into this groundbreaking development. Don't forget to subscribe, like, and share, and let's start. So here we are starting off with every single time. I'm an idiot, why didn't I buy Bitcoin at 57,000 March 2024 at price of 74k? And now at a price of 57k, low, I ain't buying that, May 2024. Welcome to Bitcoin, 73,000 blank 56,000 Bitcoin. The next one is actually news. Now, the Bitcoin now has predictable and steady monetary inflation rate lower than 1%, making it the soundest money the world's even seen. You've got 4 more years to study this before the next halving, which will bring it down below 0.5%. Bitcoin must hold this support or we will fall down to 52,600. Always zoom out to ease your anxiety. 29%, 36%, 38%, 33%, 38%, and 38%. And what are we looking at right now? 38% decrease as well. So the next, probably the rise we're going to get. Bitcoin last deviation before its run to $110,000. On a daily time frame, it looks like yet another manipulation before Bitcoin takes off. Plus, LMACD reintegrated the reset zone and could be crossing bullish promptly. The Bitcoin's price has fallen 15% post-halving, dropping from around 67,200 to 56,500. Despite a pre-halving rally, this decline contrasts with historical post-halving trends. Analysts cite factors like stock market declines and slowing ETF inflows as a potential causes. Also, don't miss the bottom again. Since the 15,500 bottom, Bitcoin has experienced 4 pullbacks ranging between 20% to minus 23%. And a few more such pullbacks are likely as the price continues to rise towards its peak. Historically, each of these pullbacks has been a perfect opportunity to accumulate more Bitcoins. Currently, the price has already dropped by 23% from its recent all-time high of 73,800, and if the pattern repeats, Bitcoin might have already bottomed out or will bottom out soon. Don't miss the bottom again. Totally normal and sustainable, as Japan needs to buy Bitcoin. That's what every single currency needs right now. There's zero institutional demand for Bitcoin. Stop paying attention to arbitrary lines and people trying to time the markets based upon technical analysis. 99.9% are wrong. They really needed retail investors as exit liquidity to jump into Bitcoin near all-time high. Utility is more than speculations. Next up, Tether is the greatest business in the world and you give them dollars. They give you Tether tokens, which are essentially entries in a database. They use your dollars to buy US bonds yielding 5%. They use the yields to buy Bitcoin for their balance sheet. And that's how the business works. Justin, head of ETF, said both Goldman Sachs and JP Morgan have re-signed. Maybe it's a coincidence that both the companies missed the most successful ETF launch in history with the Bitcoin ETF. The Bitcoin Rainbow chart has been a fascinating tool lately, showing a recent dip into the still cheap zone. What's really intriguing, however, is the projection for the 2024 orange zone, indicating a potential surge to the 160,000 to 200,000 range. Remarkably, this doesn't even breach the bubble territory according to the chart's metrics. Now the big question looms: will we witness the red zone during this bull market's peak? Breaking news is Bitcoin sentiment has flipped into fear. Fear and greed index is now we are in the 43, and now it is finally fear. This 22% drawdown from all-time high is just business as usual. You can't expect a 200% CAGR upside for 10 years without significant volatility along the way. It's a good time to learn why Bitcoin, when there's a pump we buy, when there's a dip we buy. We are not living. There is no liquidity below us, as we could see, as Bitcoin always follows the liquidity. Don't get trapped, all shorts will be squeezed. Let's see how it plays out next. So, new US bill aims to eliminate double taxation on crypto staking rewards. The US lawmakers have proposed a bill that clarifies the taxation framework for cryptocurrency staking rewards. Bipartisan lawmakers Reps Willie Nickel, DNC, and Drew Ferguson, RGA, introduced the Providing Tax Clarity for Digital Assets Act on May 1st to clarify how staking rewards are taxed. The law proposes preventing double taxation by taking the staking rewards only at the time of sale. The bill would define staking rewards as created properly under the US tax code. The Providing Tax Clarity for Digital Assets Act would give the industry desperately wanted tax clarity, establish United States leadership in digital asset tax treatment, and encourages innovation and business in the United States. By Ferguson, as he said. Staking rewards are earned by cryptocurrency holders who actively participate in securing and validating blockchain network, receiving additional tokens as an incentive. The complexity arises because their taxation remains unclear, with many investors confused over whether rewards should be taxed upon the recipient or sale. The proposed law responds to an earlier ruling by the Internal Revenue Service, and according to the tax watchdog, crypto investors earning staking rewards are required to include the value of those rewards in their gross income when filing taxes. The proposed law has garnered positive feedback from the broader community, as the idea of taxing block rewards from proof of work or proof of stake networks only at the time of sale has been met with enthusiasm. In a statement of Crypto News, Taha Abbasi, Chief Technology Officer at Staking Technology Infrastructure Provides Ferrum Network, expressed his optimism, stating, "We applaud the initiative by the US Congressman Drew Ferguson and Congressman Willie Nickel to facilitate clarification in tax legislation for digital assets, specifically relating to staking technologies. We believe this bill will help cement the US as not only the leader in technical innovation, but also legal and regulatory innovation to support our ever-evolving technical ecosystem." Meanwhile, Shayla Warren, CEO of the Crypto Council for Innovation, called the law right on point, adding that a bill will offer the needed clarity. Both Rep Nickel and Rep Ferguson have advocated for implementing clear regulatory frameworks for digital assets. Last year, Rep Nickel played a key role in pushing the Financial Innovation and Technology Act, which looks to create a regulatory framework for digital assets designed to protect consumers and encourage innovation. And the bill closely followed the forced Bitcoin halving event on April 19th, which reduced Bitcoin's mining from 625 to 112.5 Bitcoins per block. Bitcoin post-halving price consolidation could last for 2 months, says Bitfinex. So, furthermore, the analyst said that the general consumers and businesses are better prepared and informed about the state of underlying economy when compared to previous crypto market cycles. Consequently, we believe we could see a 1-2 month consolidation in Bitcoin prices, trading in a range with swings of 10,000 on either side. The report adds that any positive impact on Bitcoin's price following the halving, which has reduced the supply of a new Bitcoin to the market, will be seen in later months. And at this point, the economy is also expected to be performing better, having achieved a soft landing and avoiding a recession, providing further impetus to crypto assets, as the analysts wrote. That's kind of all the information we got for today's video. Don't forget to subscribe, like, and share. See you in the next one, and peace.